Boom, boom, boom. Good morning, traders. Good afternoon, maybe even good evening or close to it, depending upon where you are in the world. Anyway, welcome to Live Trading with Oliver Velez, day 2. It's our final day. As most of you know who were participating in yesterday's live event, that my team decided to sort of have 2 days of exposing you, lifting the curtain as you will, to give you the ability to sort of come in and see what we do and how we handle ourselves, specifically during the U.S. market open. And I thought it was a good idea. So here we are with day 2. If you did not happen to catch day 1, I strongly encourage that you do, because during the first live trading session yesterday, we laid a really important foundational layer to proper trading, especially proper trading off the open. Now, if you followed my work for any period of time, guys, you know that I believe that every single trader should have this unique special skill, a skill that I was fortunate enough to develop all the way back in the mid to late 1980s, and have been teaching traders for the last 30 years. I believe that trading all day long, staring in front of a screen all day long, turning this activity of freedom and independence, where you can be in business anywhere in the world with a laptop computer and an internet connection, turning this into another 9 to 5 job, a ball and chain where you're stuck at a desk 6 to 7 hours a day, is not what you want to do. If you enjoy it and it's not work, then fine. But I want every single one of my traders to have this skill and ability to be able to earn their living inside of 20 to 30 minutes. Now, a lot of people think that's hyperbole, or a lot of people think that that is fake, but that is not fake. All right. And this is one of the reasons why we just wanted to sort of show you what's not only possible, but show you what we do in that first 20 to 30 minutes of trading. Now, we laid some good groundwork yesterday. Today, we're going to build on that foundational layer that we talked about, state and location. Again, if you missed that, I need you to review that. And perhaps if we have some time, I'll bring in some of our traders to show you what they did as well. I'm sort of abandoning them today because of you, but maybe I can bring some of those in after we do our thing here to show you what they did. All right? All right, so without any further ado, what I talked about yesterday is the fact that most people over prepare for the open. And this is a tendency, especially amongst individuals who aren't really truly proficient in their trading yet. They think that the more they prepare for the open, the better the odds that they have. And this is an error. There isn't very much we can do to prepare for the open. There are a few things, but it's not a lot. It takes less than 2 or 3 minutes in reality to get yourself set up for the open. So let's talk about this, because this is about the time that I'd like you to start prep, all right, for the open. A little less than 10 minutes before the open is where you should start. I find that if a trader starts too early, they have too much time to start leaning to one side or the other in the markets. Do you understand? I don't want you leaning. I don't want you anticipating that today is going to be a day where we buy. Today is going to be a day where we short. You can't really lean that way, because things can radically change in the first 2 to 5 minutes of the trading day. So I don't want you leaning. I do want you preparing a little bit, but I don't want you leaning to one side or the other. This leads to bad trades. All right? So let's do this here, guys. I bring up my trading screen here. All right. And We went over how this trading screen is set up yesterday, so I don't want to waste time doing that today. You can always refer to yesterday's session if you've missed anything. But remember, what we're looking for, people, is we're looking for the prior days, yesterday's data. We would like yesterday's data to be relatively flat and narrow. The last hour or so of yesterday's data, we would like to be relatively flat and narrow. Remember, we talked about looking for things that are indicated to open in the preferred spots. Your best spot is here, right above that state, or right here, right below that state. Now, of course, there's some interesting opportunities that can come from here, way above and way below, but the very best is right above the state and right below the state. So why don't we do this? I am going to flip on the far right hand side. I'll show you this of my screen here. You'll see my watch list. Okay? Now, these are the symbols. So I'll click through. And what you're looking at when you see the green is that sorry about that. You're looking at stocks that are indicated to gap up, and I can find where the stock is likely to open because this is where it's trading pre-market right now. Okay? So here is yesterday's data. Here is where it's opening. Of course, this would be your preferred location. Okay? So the first thing you should try to do is pull out get prepared for anything that is indicated to open just above its state. Now, notice that the last hour of the day for this stock is like this. We prefer it to be flat. So that's the preferable setup where the last hour went flat versus the last hour went ballistic or fell off a cliff. So the creme de la creme is, hey, are you okay? Is everything okay? You called me. Is everything okay? All right. So I'm hoping that I was showing the screen here, guys. So notice how this is running to the upside. Okay. Notice how this is running to the upside, but we prefer the last hour of yesterday's data to be flattish. This is not flat. So instead of falling off a cliff in the last hour or going ballistic the last hour, we prefer that state to be relatively flat. Okay? That's what we prefer. And guys, everything's okay? Of course, we can look at what's indicated to gap down as well. All right? And so here we have, here is Visa gapping down huge from yesterday's price data. And I like to have a small handful of things that are actually gapping above yesterday's state and below yesterday's state. But the key thing that I want you to understand is that the preferable locations for state are right here. ¿Cómo estás? All right, let me see. Gracias. Uh, Guys, what is going on here? What is going on? There's no screen? Guys, is the screen operational or no? Now we can see it? I wasn't showing the screen. I was showing me. Sorry about that. We've had no screen at all. I'm good now? All right, I apologize about that, guys. Let me see if I go back here. Shoot, let's see. All right. I think we're good now. I think we're good now. All right. Okay, guys. So what I was trying to explain to you is that we're looking for the last hour or so of yesterday's data to be relatively flat like that. I don't want the last hour really to be skyrocketing to the upside or collapsing to the downside. You follow what I'm saying? So that's preferably what I want to pull out of my watch list. Anything where the last hour or so is relatively flat like this. That's going to make up the majority of what I pull out of my bigger watch list to create a smaller watch list off the open. All right? Okay. So, guys, here's an example. So we are 200, but this is relatively flat in terms of data. But CVX was not. That's not relatively flat. That's straight up. So anyway, guys, we're off into the races here. And let's just see if something develops here for me. Remember, this Visa really gapped down pretty big here. I am actually going to keep an eye on that one there. And let's see, BABA, huge gap to the upside. Tesla, decent gap to the upside. But remember, guys, now remember location here. All right? Preferable location is here for going long. This can go both ways. That's more of a 2. That can go both ways. So if we want to go long Tesla, we need green to eliminate this red. If we want to go short, we need to see more red with the possibility of it dropping. All right? So that's how you play position 2, right? Position 1, you want to see green. Position 2, right? You want to see, if you see red, you want to see green take out red to go long. All right? So see how red is starting to disappear here? You want to see that red get eliminated by green, or you want to see a lot of red to maybe play it this way. See? So the red is disappearing. So my traders would go long here if they wanted to take this play because the red was eliminated. Now, it's best to wait for the first 2-minute bar to finish. You see how quickly that changed? You see how quickly that changed? That is a very quick change, and that's something I want to talk to you about. Now, because that moved really fast red, look at what I'm doing here. I could lose on this, but let's see. What I decided to do was take a short because the red is big. Now, I will lose, guys, if this red gets taken out. Do you understand? I will lose if that red gets taken out. But if it continues to drop, I'll make. Okay? So the point I wanted to show you here, all right, this could turn into be a loss. Let's see. What I want to show you here, this is a beautiful strategy to show you this. The preferable location, guys, the preferable location is 1 for going up. All right? When you have location 2, it's a little trickier because you can play position 2 up or down. Okay? The way you play position 2 down is you need a sizable red to develop. Well, that's what I got from position 2. I got from position 2, I got a sizable red. That's how you play down from position 2. Okay? Now, the way you play up is you need small red is taken out by green. That's how you play long from position 2. And I'm gonna spend some time on this a little bit later after our trading period goes away, or after we finish our trading period. All right? But let's see if this develops into a loss. It's looking pretty strong against this red, which is not really what I want to see here. But we shall see. I'm going to put this over to the side. And I want to see if we can find something else as well that demonstrates this same thing. Ah, this is beautiful. Meta is a really, oh shoot, guys, I'm going to have to stop out on this. Let's see here. Very strong comeback from position 2. Sometimes, guys, you have to take the losses. Don't let me forget to cover, guys, do not let me forget to cover the the Meta. This is a very, very powerful event that I want you to be able to play. All right? Let's see. Baba's big gap up is holding well. H2, guys, take a look very quickly. Whenever I see these things, I do want to show them to you. Yesterday's data opens not in position 1, but opens in position 2. And it eliminates red here. This was red first, and red is overcome by green. Boom. Right in position 2. That's a long. Remember, in position 1, we want to see only green. In position 2, if we get red first, we want to see red taken out or overcome by green. All right? Again, once again, I need you to understand this because position 2 is a bit more complex. All right? If you're playing position 2 short, you need to see a lot of red develop there That's what I did with Tesla. It's tricky because it can come back on you, like my Tesla did. It can come back on you. All right. So I'm going to have to perhaps eliminate the Tesla here. There it is. All right, so stop out on Tesla, guys. All right, stop out on Tesla. Can't win them all. You cannot win them all. All right. Okay. But let me cover this for you here, if I may. This is not the wrong play from position 2. All right, guys, this is not the wrong play. Position 2, you can play down from position 2. This is position 1. The way you play down is to wait for a sizable red that you can dive into. All right? Okay. Trying to turn this around a little bit because I am now, we're going to see if I can turn this around. All right, guys, flipped the long, flipped it long above the highs here. Short, stop out, flip long, but let's see if I can really turn that into something. What I want to show you, once again, remember I told you I was going to build on this yesterday. Position 1, you only want to see powerful red, preferably. From position 2, it's a little tricky, guys. From position 2, let me see here. All right, guys. From position 2, you want to see if you get red first and you want to go long, you want to see green take out red. However, if you get sizable red, you can try the short. That's what I did with Tesla. You can try the short with the idea of it dropping back to yesterday's data. So, what did I do here today? Which did not work. I tried the short from position 2 with the idea that maybe it fell. I was profitable at a certain moment, but it reversed on me. You've got to be able to take your losses, stop out here, enter here, stop out above the high, flip to long to reverse, to try to reverse the damage. All right? But this is a controllable loss. You're not losing a fortune. The gain if it worked, would have been something like that, falling back to yesterday's data. The key thing that is very important to understand here, guys, is position and the strategy from the position. We want mostly green to go up from here. We want to play mostly red coming down from there. Green moving up from here. And the 2 is a little tricky. In fact, in reality, guys, because position 2, you can go both ways. Position 1 is only up, position 3 is only down. In the middle, you can go both ways. It's because in the middle, you tend to get a little extra volatility. The stock doesn't know whether it wants to be, the stock doesn't really know whether it wants to be a down or an up from position 2. When I'm starting a trader off in their trading development, I really only have them predominantly focus on position 1. I want them to become a position 1 expert. Then we go to basically trading position 3s down, and we save position 2 for focus sort of last, simply because you can get this rattling effect in position 2, and it requires a little bit more skill. All right? So it's a perfect example of position play, playing by the numbers, and knowing what the tendency from each position will be. The tendency from position 3 will be down. The tendency from position 1 will be up. The tendency from position 2 can be either up or down. And I should demonstrate that this way. All right. It can be down, it can be up or down. Okay. And so that's sort of why I kind of leave position 2. That's why I leave. So position 1, you predominantly play up. Position 3, you predominantly play down. Position 2 can go either way. You want to see strength before you play position 2. So either strength to the downside or strength to the upside. You need extra strength from 2. Now, guys, I thought I had the extra strength from Tesla. I thought I had it. All right. There's the position 2. There's the extra strength. I thought I had a clear play back to support. But every trade can't be a winner. And adhering to your stop, keeping your losses limited is very, very important. Not engaging in the practice of hope. Now, let me talk about me reversing this trade, which I think is important because a master trader needs to know, guys, whether or not a master trader needs to know whether or not a stop out is a signal to reverse and go the other way, or is it a signal to, I'm done, let me move on? Knowing that separates master traders from normal traders. Master traders know this is not just a stop out, it's a stop and reverse versus this is a stop and go. Just leave it behind. Let me get the heck out of Dodge. Let me move to something else. Okay? So let's talk about when something is a stop and reverse versus just stop and move on. Let's go. If I get strong, something really solid like this, you see? If I get something really solid like that, and it has virtually no follow through. I mean, maybe a tiny bit, but virtually no follow through. And it just rockets to remove this strength. That is a stop and reverse. So you get out of the play and you reverse the play, the short, to an opposite long. So the key is several things. No follow through. One, no follow through. That's what I'm gonna do the follow through. On strength, this red is very powerful. This red was very powerful. This experienced little to no follow through. What's little to no follow through? It didn't give me another red. It blipped, but it didn't give me another red. That's what I call little to no follow through. It gave me a green. Now, just a green is not enough. I need the takeout after, the complete removal of the entire reason that I took the trade. That's the stop and reverse signal. And the last thing, so let me just do this again. We're gonna map this out again. This is very important. This is actually getting quite advanced when you know when to stop and reverse and when to just stop out. So the first criteria for knowing when to stop out is a stop and reverse is appropriate is you get little to no follow through, guys. You get little to no follow through after power. After power. Do you understand? That's little to no follow through after power. So, what is little to no follow through? Let me write this here. No follow through. Right there. That's one. What is little to no follow through? It's no, shoot, what the heck are we doing here? It's no additional red. You see? So I got no additional red here, guys. No additional red. Criteria 2. Oh, shoot. Did I get short by mistake here? Got short by mistake here. Hitting the wrong buttons here, guys. So no follow through. I'm going to try to take this long here. Criteria 2. Green. Takes out and removes the strength entirely. No follow through and take out. So the next thing is take out strength. And here's the key. You need this takeout to be 1 to 2 bars. This is very important. 1 to 2 bars. So look, I got 1 green bar, 2 green bars took out the red. If it's 3 or 4 or 5, it doesn't count as a stop and reverse. Now, this will make you very, very astute with your stop outs. It'll give you guys knowing when to flip your stop outs will get back something like 60% of your losses. So a master trader who knows when to reverse their stop outs can actually cut their losses by as much as 60%. And that's enough to throw a trader into deep, deep profitable territory. Imagine going over all of your losses throughout your life and getting back 60% of them. How crazy is that? What if you could get back 60% of your losses? Do you understand? So that's very powerful. But you got to remember the specific criteria. No follow through after power. Take removal of the power and removal of the power, right, in 1 or 2 bars. Anything after 1 or 2 bars, it's not powerful enough to be a stop and reverse. We stop and reverse power. We don't stop and reverse gradual takeouts. All right. Now remember, guys, I wanted to talk to you about meta, which I felt was a very powerful example to show you. All right. Meta is very powerful, guys, and I really wish I took this trade. All right, really wish I took this trade. This was the trade to take. All right. Notice yesterday's data. Let's go over everything I've taught you, right? Let's go over everything I've taught you with yesterday's data. Here's yesterday's data. Relatively flat. It's the last hour or so of the day from yesterday. Relatively flat. We actually start out in the bullish territory. But look at what happens. Meta experiences power to the downside, and it gets to the most preferable area to shoot downward. Remember, position 1 above and position 1 below are the preferable positions. Well, this is position 1 below. All right? And so what we have is weakness. Everything okay? What we have, guys, is weakness from above to below, a relatively tight, narrow, sideways yesterday's data period. And boom, this is your most ideal play to the downside. That was the play, guys. That was the play. Do you understand? That was the play. I'm trying to turn this thing around here, guys. Trying to turn this thing around on the Tesla. It's that stop and reverse getting me out of trouble here. All right. Anyway, very, very powerful here. What is it doing here? Okay. You know what's happening, guys. Give me just a second here. It's got me into a different position here. 2,500 here, but net of 300. Oh, I see. I see. A second here, guys. Up 3,000 here, guys. Here. Ah, what are we doing here? Tesla. Coming back up on me here. All right. Okay, not bad. All right, so a second here. All over the place. Sometimes it's hard to trade and teach at the same time, guys. All right. That weakness gets us right to the most ideal position for the short. That is position one. This is position two. You're down now toward position three. All right. Position one is your best position to play to the downside. So in reality, guys, I wish I caught this because I trade meta a lot. I trade meta a lot. This is that's a perfect short to the downside. Perfect. Perfect. All right. Now Tesla is falling here from, I wouldn't say that's quite a position three yet, but the higher you get away from yesterday's data, guys, you understand? The higher you get, the more susceptible you're going to be to weakness. And I teach my traders, I teach my traders I teach them a space concept, right? To judge whether or not you're susceptible to a sharp fall. That space concept is called dual space. It's the dual space concept, right? Where you have a space between your stock, the 20, and the 200. So here's space number 1 and space number 2, okay? And when you have dual space created by these three things, you are susceptible to a sharp decline, all right? I'm short on the Tesla here. See if I can cover some of that. Two, out. Okay. So that's another concept that I think you should be aware of. A lot of traders get caught by initiating, there's nothing wrong with riding positions from here, but to initiate a brand new position here in dual space is really asking for trouble. So remember that. Dual space is stock, 20 MA, and 200 MA is wide apart, creating your space 1, space 2 leads to reversal. All right, very important. Space 1, space 2, 1 and 2 typically leads to reversal. All right, good job. Okay. I missed my beautiful play here, guys. This was the most beautiful play of the day. I missed it. Let's see if we can find something else that was beautiful. And maybe some, let me see if some of my traders actually, let me see if some of my traders actually played this. All right? Let me see. Catch the meta today. Did anybody catch the meta today? No? Beautiful. Oh, Samuel, you caught it? You caught the meta? Very, very nice. Did you play it all the way though? You got the whale complete? Let's go over that. Let me go over that. Let me go over that. I don't know if you guys can see. Samuel, walk us through how you did that. Walk us through how you went through the meta trade, if you don't mind. Where did you grab the meta? Where did you grab it? 561.80. Oh, you grabbed it late. Okay. 561.80 here. So somewhere along 561.80, somewhere along here. Okay. You added at 561. So you added at 561.20. But how many lots did you do? Did you do like 2 lots and then 1 lot? All right, so 561.80. So you grab that late. So guys, the optimal entry is a little higher. So Samuel got in a little bit late here, but that's okay. Two lots. You were in another trade. That's why you missed it. Okay, got it. And you added under the low here 1 lot. You took profits at 55, 558.80. I mean 558.80. So you took profits here. How many lots did you take on profit, Samuel? 2 lots out, riding on 1 lot. Where's your stop? I'm assuming your initial stop was up here. Is there a stop adjustment in the trade? Move stop to the pivot. Beautiful. That is beautiful. Pivot 1 stop adjustment. As a pivot is when your stock bounces a little bit and drops again. If the original stop's there, we move to the first pivot. Okay? Pivots are great stop adjustment points. You can have different types of pivots, though. The two main types of pivots are drop, rally, drop again. That's a pivot. Or you can have drop, sideways, drop, and this top would be a pivot as well. So if you look carefully, what Samuel did, he entered here 2 lots, entered under the low here 1 lot, stop, profit take 2 lots, protect the remaining lot by moving to pivot 1 right there. That's beautiful. Okay? And profit take new low 556. I mean 550. You mean 556.71. Okay, so here. Right there. Oh no, wrong. 556.71 here. And move stop to the big bar and stop out here. Got it. All right. Okay. Samuel, I think this is a great trade. What did you actually wind up doing on this trade, if you don't mind my asking? Samuel, come on, come on, come on. Talk to us, unless you're in a trade. Sorry for bothering you guys in a trade. But all right, this is a very, very, guys, this trade by Samuel covers everything that I want you to be aware of. Position, he gets in the right position, short. He adds, every professional trader usually adds to a winning play. He takes profits here, stop. He brings the stop down to pivot one, takes profits again here, I'm not mistaken, or gets stopped out here. Anyway, this stop out, guys, I don't like to get stopped out inside of fat red bars. So if you give me a fat bar, I'll stop out above the bar, but not in the bar. Fat bar, I'll stop out above the bar, not in the bar. So, I will have to, I will take a bigger loss. I will take a bigger loss a lot of times, but I don't like to stop out in the middle of a bar that is power. You understand? So I don't like to stop out there. I like to stop out above the big bar. I will take a bigger loss, but on many occasions I am saved by the big fat red bar. The bounce up is temporary, and the big fat red bar weighs on the move up and brings it back to the downside. All right? But I see what Samuel did, because this is a big bar too, and he stopped out above that big bar. Okay? But I like to keep my stops above the highest red bar. So my stop adjustments would be something like this. Let me show you. If you want to walk down big bars, big fat red bar, big fat red bar, big fat red bar. Okay? If another red bar stops out inside of a red bar, I opt for the higher one. So my stop remains this bar. So I'm walking the stock down. Boom, boom, next, boom. Okay? And here's where we would just do bar by bar and stop out there. All right? But it's not a bad trade, Samuel. You did a great job. Ari is saying that Microsoft did really well today, too. Let's see if we can find Microsoft here. Oh, beautiful. Oh, my goodness, guys. This is beautiful. All right, my traders are shining here today. Notice, guys, yesterday's late day data. Look at the flatness. Remember, guys, when you're looking for possible plays, you want flat and relatively tight from yesterday. Yesterday's late day data is tight and flattish and narrow. If you have this or this late yesterday, your odds of a good play drop. Okay? So the first thing you do is go through your list to find flat and narrow. Flat and narrow. Microsoft is flat and narrow from yesterday. Now remember, from the flat and narrow, your best position is either right under or right over. So in Microsoft's scenario, we get the best position right there. Now, what color do you want in the best position? You want red here. In the best position up, you want green. Okay? But we get red, sorry about that, we get red in the best position possible. Boom! All right? All right. Ari, Ari, did $732 on that play. Excellent. Very quickly, walk us through if you don't mind. Walk us through. Did you get the first entry bar? All right. So enter in the first bar. How many lots? 40, 432, 47. Oh, that's good. That's a good entry. All right. 432, 47. So boom. Two lots. Stop. Now, what Ari's saying is that he needs to get his stop above the narrow base. You do not want to get stopped out in your desired location. Remember, guys, your desired location is here. All right? You do not want to get stopped out anywhere in the desired location. You've got to get above everything with your stop, even if you have to play smaller than normal. All right? You do not want to get stopped out in the desired location. So we're entering perfect location, two lots. My stop is above the narrow state. All right, good. Oh, you entered one lot here. Okay, higher price stock. I get it. So see how, guys, Ari entered one lot so that he could get his stop above. Two lots may not have been able to get his stop above that that narrow state there. Hidden color change for 31. Okay, so you're adding under this little tiny. Okay, we add, guys. All master traders, guys, listen. All master traders add. You will never get become a big profitable trader without adding. And very quickly, let me explain this. You add because you rarely, if ever, go all in like a kamikaze. So you're always going in partially just to make sure the trade's okay. And the amount that you've held back, you add when the trade starts proving itself. And this is one of the main things that I find so many novice traders fail to do. They go all in. They play like they're at Vegas. I'm putting everything on black 13. I'm putting everything on this trade. They play one dimensional. Everything in, everything out. Everything in, everything out. They trade like a kindergartner. Professionals don't do that. They take a portion of what they want in first. So let's say half of what they want in, they put in half to test the trade. They like the trade, but if they're going to lose on the trade, they want to lose on half the position, not the full position. So they keep their losses smaller by putting half on. Your worst trades are the worst trade is the immediate loss trade. That's my trade this morning, my initial trade in Tesla. That's the worst trade. The better, I mean, the worst loss is one that comes right away. So because the worst loss is not later, it's right away. What do you want to have at risk right away? A portion of your trade. All right. The losses that happen later are actually smaller. The losses that happen right away, they're the more damaging losses. Remember that. You should write that down. Losses that happen after, way after your entry, they're very tame losses. The damaging losses are the losses right away, like my initial Tesla trade today. So because the most damaging losses are right away, you never want to have all of your position on right away. That's why you must be an adder. So we put portion of the trade in right away. Once the trade starts proving itself, boom, we add the remainder, and now we're in full position. And losses that happen after that are rather more tame. All right, this is a very important point. Very important point here. All right. Sorry about that, Ari. I just wanted to leave the crew with that. It's a very valuable, high level point there. So we are adding enter one add. So Ari wanted 2 lots, but he couldn't do 2 lots. He put half of it on and the other half later. Good. What's next? Very quickly, Ari. What's next? $9.46, 1 lot. Boom. Color change add right there. See that red bar, guys, that takes out the green bar here? Boom. That's called a color change add. The basic name we use is the color change add. Red takes out green. Boom. Now we've got 3 full lots in the play. All right. This is very methodic, guys. Entering in the perfect position on the perfect color. 1. Stop out above the narrow state. You do not want to get stopped out under or in that narrow state. Add once the stock starts proving itself. Add again on the next color change. Red is regaining control over green. 3 lots in. All right. Stop adjustment to pivot. Remember what I told you a pivot is? We have a stop up here. P1 stop. Boom. P1. There's the P1 stop right there. Boom. See that? Drop, rally, drop. Okay, beautiful. P1. Move this back. Okay. P1 stop. 954, 2 lots. Whoa, beautiful. $954, 2 lots, okay. 2 lots out, $954. Stop adjustment, big bar at 956. So remember the big bar stop adjustment, guys, right? Look at this big bar, okay? Bringing the stop on top of that big bar and stop out on the trade. All right? Now, it did go lower, but that's a proper stop. Remember, we don't want the big bars being taken out. We don't want the big bars being taken out. That is an awesome, awesome trade. Awesome, awesome trade. I love it. Awesome, Aaron. Okay. All the elements in this trade are there. Everything that I've covered over the last 2 days, two sessions is here. The narrow, flat state from yesterday's late day data, the perfect position, the perfect color in the perfect position. Okay. The partial entry, the ad once it starts proving itself, the entry on the first major color change, the ad on the first major color change. And guys, remember the profit taking? Remember the profit taking guidelines? Some of the profit taking guidelines I went over yesterday. If you did not catch that, that's very important because a lot of people say, well, Oliver, okay, I know from your tactics that narrow state, I know my best positions, I know the color to play, and I know to add once it starts proving itself to me, but when do I start taking profits? Well, there are a variety of ways. I can't go over all of them, but one of the ways I mentioned yesterday is to trade by the numbers, right? So now, if we playing position 1, what's the next stop? Position 2. And what's the ultimate profit-taking stop? Position 3. So remember I talked about partial profit taking. I teach my traders incremental profit taking. So if you're entering position 1, if you're trading by the numbers, you can take partial profits in position 2, and you can take all of it in position 3. All right, let's take a look. So we're entering, right, in position 1. I still get excited about these things, trading by the numbers. So we're entering in position 1. Ari took profits in position 2. Remember that? So he took profits in position 2. And he got stopped out after the stock reached position 3. Okay? Very, very nice. And so if you have this foundation in place, guys, it's not that every trade's going to be a win. It's all about numbers. But 7, sometimes more, 7 wins out of every 10. That's the ratio we strive for. We want our trading to be in that sweet spot. Every 10 trades, on average, you get 7, sometimes 8 wins out of every 10 trades. And with that ratio, you can make your entire living in the markets. All right? And trading by the numbers this way is the very best way to start. Knowing that first thing, flat, narrow state using yesterday's last hour of data are going to produce your best plays. The reason for this, let me go into this just really, really fast here. The reason why flat, narrow states create flow. Flat, narrow state, you've got flow. Do you understand? The reason why is because the stock is in a resting state. Flat is resting. And what happens after flat is either explosion up or explosion down. So this resting state leads to unrest or wake up out of my rest to explode up or down. If the latter part of the day was rocking like this, Your stock is not rested at the open. So it's carrying its exhaustion into the next day. So you tend to get reversals. Do you understand? Because it's already expended its energy late yesterday. It's trying to continue for you, but boom, it can't because it's not rested from yesterday. Whereas that this is rested from yesterday. It was resting, so it starts the next day fresh, rested, with a good night's sleep. So that is why we tend to focus largely on flat and narrow from yesterday because the stock is rested. Now, your greatest trades will come from this flat and narrow state. You understand? Your greatest flow, your greatest momentum on average will come from flat and narrow states. And that is how I start traders off. Understanding state, right? Understanding position, right? You know, I'm belaboring the point here because it's my last day and I want you to have this down. If you don't join me in my family, then I want you to be able to do this or start practicing yourself. So you got 3 positions above the narrow state, 3 positions below the narrow state. Let's do 1 and 1. So that's the position. Those are the 3 positions above, and then you have 3 positions below, right? 1, 2, and 3. Trade by the numbers. You know that the color that you want here is green. The color that you want here is red. Okay? The 2 is a little tricky because you can get both. You can get red and green from 2. So I would leave 2 aside for now and focus on 1s and 3s and predominantly 1s. Remember, on the downside, the color you want is red. That's what we have here. Perfect location, color red. Okay? Those are going to be your best trades. We want from 3, you can get green. And from 2, it can be both. So once again, I would leave 2 aside for now because that's the trickier one. Okay? Add to this profit, add to this always going in with, let's say, half of your initial trade. So once you have the proper location, going in with half of your intended play, just to make sure the trade's okay, adding the other half once you start going, okay, in your desired direction. There's more detail to that, but these are broad strokes. Adding on the first color change. So you can do that. I go in partial in the right position. I add the rest on the first color change in my desired direction. All right? I can adjust just stop, right? Big bar by big bar. Don't let big bars get eliminated. If you get a big bar in a short, step right on top of that big bar. All right? Let's go over this. So once you're in, you can go pivot stop adjustments and big bar stop adjustments. There's a little more detail I teach my traders, but this is just for you right now. You can always adjust on top of big fat red bars and just walk your stock down for maximum profitability. All right? Big bar by big bar by big bar by big bar. It's a beautiful way to protect yourself. why stocks should not be removing big fat red bars on the downside. Anything that's sizable, just move that stop right on top of the big bar. And Ari did that here with this big bar, and he got stopped out there. That's perfect. You can't grab every little penny that's available to you. All right? So that's a perfectly executed trade. Remember also, profit taking, all right, from profit taking can be done by pushes and by the numbers. So if you're taking a position in position 1, you really don't want to take profits until you're in position 2, which is what Ari did. And if you leave some in, you want to try to get position 3 profit take. And guys, I will tell you that if you take these foundational concepts to your trading, it doesn't matter, guys, whether you trade, we predominantly trade on a 2-minute chart. Doesn't matter whether you trade an hourly chart. Doesn't matter if you trade a 5-minute chart. Really doesn't matter too much if you trade a 1-minute chart. I don't like trading the 1-minute chart. It's too noisy. But it doesn't matter if you trade the daily chart for longer term plays. These concepts are the same. It's the same 20-period moving average of that time frame, the same 200-period moving average of that time frame, the same narrow states, the same everything. Nothing changes by changing the time. The other thing, nothing changes by changing the market. You can trade equities like this. You can trade Forex like this. You can trade futures. You can trade anything like this. We're playing human nature at work. Human nature does not change by changing the item that humans trade. The same emotional reactions, the same psychology is going to be applied to whatever human beings pick up and start trading. So nothing changes. Everything I've covered with you today is applicable in every market in every time frame over the last 2 days. You can take this narrow state concept, you can find narrow states. They don't always have to be at the open. For instance, the Forex market doesn't have an open. Just look for a narrow flat state, and that's your open. Doesn't have to be at the start of a day. It can be any time throughout the day you get a narrow state. Now, from that narrow state, what's your positions? And go from there. Narrow states can occur at the open. I like trading them at the open because I like to get in and out, 20, 30 minutes, I'm gone. But narrow states develop later in the day, later in the morning, later in the afternoon. Narrow states can form later in the day. Anytime you get a narrow state, you can play this number game. So once you get that narrow state, your 3 positions above, your 3 positions below. Know the colors. Position above, right above, green. Position way above, red. Position right below, red. Position way below, green. All right? Don't lose your narrow state. If your narrow state is broken, you're out of the trade. If a big bar is broken, you're out of the trade. No violation of narrow states, no violations of big bars. Write these things down. Don't stay in a trade where a big bar has been taken out. I got a Tesla, big bar was taken out, I got to get out. That's the rules. Narrow state gets broken against me, I have to get out. That's the rules. Know when to get out. Know when to take your loss, lick your wounds, and move on. That's one trade in a lifetime of trades. Don't worry. Okay? The other thing, stop adjustments, pivots, I taught you what pivots are, and big bars. All right? Don't let big bars get violated. Don't let pivots reverse on you. Pivots should not be reversing. Big bars should not be reversing. So now you have management of the trade. Pivots and big bars. Pivots and big bars. There's a lot more to that, but I'm giving you the broad strokes enough for you to start gaining some experience doing the right thing. All right, it's not everything, but it's some experience doing the right thing. The last thing, profit taking. If you're taking a position, if you're taking an initial position, guys, in position 1, you want to take profits in position 2 and 3. If you're initializing, let me go over this. This is important. I can't leave you without going over this a little bit more thoroughly. Let me do this. So, if you are taking a position in position 1, you have 2 profit areas to take. Here's position 1, 2, and 3. So you're entering position 1, you're taking profits in position 2. If you're taking not all of it, leave some in and try to get position 3. But if you're taking a position in position 2, you only have 1 profit taking zone, not 2. The odds of getting 2, I'm not saying it's impossible, just the odds aren't there. So I would want to take all of it and not leave something in there. When I take a position from 1 and I'm taking profits on 2, I want to leave something in there to see if there's 3. If I am taking a position on 2, I want out entirely in 3 because the odds of getting anything beyond 3 have dropped significantly. So that is a very, very important point. Know your numbers, know your locations, know how to trade by the numbers. All right? Now, tell me you understand that so far. I've been seeing your comments. Is that understandable so far? You got that? Ah. Are there any questions you need me to clarify on? Anything before we go to the final step here? You got the narrow state. You got the 3 positions above and below. You've got the color game. You've got the management game, pivots and big bars. You've got profit taking by the numbers. You've got stay away from position 2 for now. Play 1s and 3s and 1s more dominantly. The narrower and flatter that latter part of the prior day, the more flow you're going to get up or down from your play. All right? Good. Now, someone's saying, Oliver, what about wide positions? Wide positions represent the second best opportunity for us, but it's not something that I want to cover with you today. But the short answer is wide starts at position 3. So you usually go against wide. So if it's wide up, you play down. If it's wide down, you play up. So wide, we play to go back. Guys, remember, the market is a breathing mechanism. When it breathes in and out, in and out. So the best trades are after in, narrow, you understand, narrow, and then which way is it going to blow out, up or down? That is where does it start coming out of the narrow state? Does it come out up or does it come out down? You don't have to know that in advance. You just have to wait. If I can get you, I know you won't do it. Not without my guidance. I know this. I'm going to say it anyway, but I know you won't. I know you'll mess this up. If I can get you to just play narrow states in position one and play the right color in those positions, I can take you to the moon with this, guys. But you won't do it. You'll get distracted. You'll get pulled away by news, by what an analyst is saying over here, what your chat buddies are saying in this chat. You'll get distracted away from these basic foundational things, and you'll revert right back to doing your novice ways. Oh, WXYZ has earnings. Let's try to buy this. Or, I think this is down 5 days in a row. I think it's going to go up now. Those are all novice approaches to the market. And the vast majority of people out there are playing this game in a very novice way. They don't know where to get in and when. They don't know when the odds are stacked in their favor, tight, narrow, flat. Position one, odds are stacked in your favor. Okay? They don't know how to manage a trade, pivots and big bars. They don't know where to take profits. They're looking at their P&L and saying, okay, $200 is enough. Let me take $200, when $200 may not even be close to the profit-taking zone. They don't know when to go for more profits or when to take it all. If you're taking a position in one, you go for more. If you're taking a position in two, you go for less. They don't know these things that separate them from sophisticated play and just novice guessing. And I'm telling you that you're probably going to revert right back to the novice thing. Most people do. You're going to get distracted. You're going to revert right back to not playing position, not playing state, not managing properly, and taking little tiny profits because you're watching the P&L instead of watching position. It's just the way it goes. The majority of people do it just like this. Now, I do want to, guys, if I can, with this, I want to, guys, I've got this meta play on here. I'll show you. That is my unrealized gains here in the meta. So I just want to show you this real fast. Why? Look at what I did here. Let me show you here. Let me show you. So I've got a little less than 5K here. I want to show you this real fast here. Well, let me just take some off the table here for you before I lose this here. It's so hard to open gains in meta. Come on. There we go. Shoot. It's like I'm getting late reports here because I have too many screens open. Anyway, guys, that's open gains. I went long. I overcovered, but open had open gains of over 5,000 on that. I want to very quickly cover this for you. This is position 3 play. So remember, this is position 1. This is position 2. This is position 3 play. Anywhere down here, you want to play up, not down. Do you understand? You do not want to play down from here. You want to play up from here. You want to play down from here. And of course, two can be both ways. All right. So all that is initiating a position 3 wide state play. All right. I digress a little bit here, guys. All right. So I know, listen to me carefully. I know what we're doing, what we do here every single day is not for everyone. I know this. But I do also know, guys, that it is for some of you. Some of you, this is coming at the exact perfect time for you. For some of you, you're ready to take the professional step. Do you understand? You're ready to take the professional step. The no longer guessing, the no longer trying to do it on your own, guys, it doesn't really work for 99.9% of the people. Without guidance, without mentorship, without being amongst your peers that are trained to do this, the right thing every single day, to have someone reviewing your trades, to have someone looking over you, to have you also in the mix with traders that are better than you, some that are just coming on. All of that is very important. Being evaluated, having a structured approach, guys. Having a structured approach. I don't understand why. To having a structured approach to the game. Most people are out here ruining their family's money guessing, playing news, which doesn't work, playing earnings, which doesn't work. None of that stuff works, guys. If it was as easy as just playing earnings, everybody would be a billionaire. It doesn't work. And so for some of you, you're ready. And I have something very special for those who are ready. And I want to show you this. All right. So allow me to do that. If you are not interested, then fine. I get it. But I want to talk to those right now who may be interested. So, guys, you know, I'm not your normal trading guy on YouTube. I don't consider myself a YouTuber. I know I have a YouTube channel and you're watching me on YouTube now, but I don't really consider myself a YouTuber. I've been in the professional game, guys, for four decades. Going on 38 years professionally, going on 44 years when I first started in the early 1980s. All right? I've been one of the pioneers in the active trading space, forming companies, some of which have sold for hundreds of millions of dollars, guys. I still continue to be one of the most desired and sought after speakers on the topic of trading all over the world. Exchanges all over the world invite me every single year to address their traders, their market makers. Institutions bring me in every single year. I'm also the author of some of the top selling trading books on the market. I've been written up in virtually every single periodical you can think of. I've been a guest on every single financial program multiple times you can think of. I don't do these things anymore. I consider myself basically retired. All right. I've been honored by the Dow Jones Barron's. I have been honored by the NASDAQ for being a professional market maker for many years on NASDAQ. Guys, follow me on these socials. But for those of you who are really ready to do this the right way, to do it the Wall Street way, to do it the professional way, I've got something for you. I've got a program that basically gives you everything you need to know, also gives you the capital you need to trade with. It gives you the training every single day of your life. It gives you the breakout sessions, the study sessions, the time every single month, multiple times a month with me, the trading quizzes, the trading exams, the trading thresholds, the methodic way you are developed step by step to doing this without ever risking your family's money. And this is the way it should be done. You should not be risking your family's money. You should have one cost, one stop out, guys. Listen to me. One stop. You put something in, one stop. I don't want you putting money into a lot of money into a trading account. Professionals don't do that. No one on Wall Street's trading with their own capital, really. They're trading with firm capital, trading with somebody else's capital. This is the professional way. I don't risk my family's money. I risk firm capital. But what I specifically want you to understand is that you should know your ultimate cost right up front. And so for people who join me, they know this is my ultimate cost. There's an entry fee to join Oliver's family program. There's cost associated with developing me and training me over the next year to two. I get it. All right. It's a business. I get it. All right. That can't happen for free. I get it. But I'm going to pay this one cost and be done. That's my one bar stop. That's how I want you to look at it. You're not going to be putting money into an account and losing it. This is a one-time shot. You put something in, that's it. That's your cost. Now work from there. You've got a one bar stop. That's how I want you to look at the cost of this program. And it is a program for life. It does not have an expiration date. And so it is involved in two things, guys. You get a complete trader program that comes with a starting out of $50,000 trading account. You have to go through training first and pass training. Once you pass training, your account goes live with 50,000 and there's a payout. I get 60% of the gains, you keep 40% of the gains, but remember, I'm taking all of the risk, but you will never have to put a single penny at risk, ever. I take 100% of the risk. This program is also involves live trading camp. That is where I take you for 11 weeks under my wing. We're gonna trade, we're gonna learn how to trade the first 20 minutes. I need this skill under your belt. I want the 20-minute trader professional coming out of here. Here, it's everything, but this is more specialized to the 20-minute style of market play that is my forte. And I work with you over an 11-week period to get this on lock. These two programs, the one that is everything, that includes your study sessions, your study sessions with me, your breakout sessions, your daily live involvement under guidance with a master trader, all of that, a funded account forever up to as much as $2 million. All of that is complete, but the 20-minute, 11-week time with me, that's the live trading camp. That is the live. Here we go. That is the live. Unreal, guys. So the complete trader is your account, guys. Live trading every single day under guidance, every day. 2 study sessions a month with me, but many study sessions throughout the month, guys. But 2 with me every single month. I spend time with you twice a month. You get access to funding. You'll never have to fund an account in your life unless you want to. It's not that you don't have to. You can, but you won't have to. And a 40% payout on your profitability. Live trading camp, guys, I need you here. I need to make sure you are the 20-minute trading expert that I want you to be. I don't want you having to sit in front of a screen for 6 hours to earn your living. So this is where I take you for 11 weeks. That is me, no one else. I take you for 11 weeks here, and we get this 20-minute trading on lock over an 11-week period. These two things, yes? Am I still off? I see. Okay. Let me try to fix this. Let me try to fix this. Okay, guys. Let me try to fix this, guys. Give me a second here. Oh, I see what happened. I think that works. Okay. All right. So, guys, the trading programs, the complete package is made up of both. Do you understand? The live trading camp, the 20-minute specialty, the complete trader program that comes with daily trading, study sessions, breakout sessions, covering of every tactic, every technique, complete program with the account that is also funded for life for you. All right? Both of you can do these individually if you like, but it is best to do the complete package. I have nothing else, guys. There is nothing else really that you need to do to start your journey in the professionally in this game. There is no other thing that you need other than this and that. That is it. And then we get to work. All right? Now, there is a cost associated with this, guys. It is a business. You are costly. I pay employees, I pay staff forever to support you, to help develop you. Master traders will not work for free to train you, to answer your questions, to have study sessions with you. They're not going to do it for free. There's a cost associated with turning you into a master. And so it's a business, guys. It's not a charity. So there is an upfront cost for this, but it is very small compared to the potential of what you can become as a professional trader. All right? The complete trader's $2,500, guys. You've seen traders right here do $2,500 in a morning, in 10 minutes, in 15 minutes. All right? That is one fee for life. Live trading camp is $1,500, guys. You will be taught over an 11-week period how to generate way more than $1,500, sometimes in a given trade, certainly in a day, certainly in a week, certainly in a month or a quarter. The recouping of these costs over time as you become better, if you do the right thing, is almost guaranteed, guys. Very, very small costs in comparison to the upside. Now, if you want both, the retail is $4,000. It's a one-time fee. Guys, it's a few dinners and you're done. A few big dinners with your family and you're done. For life, forever. Full funding, never have to fund an account. Full lifetime training that never expires. Now, but I do want you to wait because those are regular retail prices. I've got something very special for you. All right? I am going to give you, in addition to your becoming a family member, I'm going to give you access to my complete on-demand course where everything that you need to do this properly is included. Every module, guys. So everything from how to use moving averages, your locations, your positions, the 14 events that we play over and over and over again, learning what the odds of the probability of each of those events, learning how to manage your trade, learning when to take profitability and when not to take profitability. Everything is covered in a very organized, detailed, professional way. This is all with me, all right? On demand, at your own pace. All right. You're going to get a trading manual that has over 300 pages that details everything that is also in that on demand. You're going to have live trading every single day that you can. Obviously, some people work and may not be able to do it every day, but you will have access to, we will trade live every single day, guys. You can't do this without trading live. You can't do this guys, you can't just do this studying. You can't do this reading. You can't become a master in courses. At a certain point, you're going to have to start trading live. And you're going to have to start trading live regularly, and you need to start trading live under the proper guidance. Nobody on Wall Street, no Wall Street firm is going to bring you in, give you $500,000 and say, go knock yourself out. You're going to be under guidance, under head traders, watching you, developing you, analyzing you, evaluating you, and that are responsible for you. This is the same thing that will happen here. You'll be operating amongst a group of peers. You'll be overlooked by professional traders that you trade with every single day of your life. You will watch them trade, watch them make money, watch how they take losses. You will ride some of their trades. They will critique some of your trades. This is all part of the learning process, but without live trading regularly, you will never get this. You cannot study yourself to being a professional trader. All right. So daily live trading every single day, or as many days as you can make it, is absolutely crucial. Live trading study sessions. So I take you and study with you a few times a month, but you will have many other study sessions with some of my other master traders as well. So study sessions are important. In addition to live trading, you need to have breakout sessions where you're not focused on a real trade, but now you're focused on a concept, sort of like what we were doing after the live trading session today. That's very important too. And you will get an account that will go live once you pass training. And so in order to pass training, which is going to take you a bit, you're going to have to show the ability to produce a $3,000 profit utilizing what we taught you. This $3,000 profit must be obtained without losing more than $200 on any given day. All right? So your maximum daily loss per day will start off really tight, $200. Now, you got to stay within a $200 loss, but while you chip away at gains that incrementally move you to this $3,000 event. Guys, you've seen traders do $700, $500, $1,500 right here, okay? So $3,000 is not an unobtainable gain. It's not very big at all right? You got to show me that you have gained that with a minimum of 200 trades. So there's some traders that make $3,000 in one trade and say, Oliver, I graduated. And I'm like, I can't graduate you with one trade under your belt. I need to see a block of trades to see whether or not that's luck, whether that's skill, whether that's ability, whether that's that you've developed consistency. And if I get 200 or more trades from you, I have enough data to evaluate what your weaknesses are, what your strengths are, where your consistency lies, which events are best for you, which events are not good for you. And if you give me 200 or more trades and you have achieved this 3,000, you graduate. Now, you might need more than 200. You might need 800. You might need 2,000. It doesn't matter. I just need a minimum of 200 trades. You can't come to me and say, Oliver, I graduated and I have 5 trades under my belt. That's not enough data to evaluate whether that's luck or skill. Okay? So once you pass this test, this 50,000 gets turned on real. Now we are real. And the goal at level 1 is the same. Earn 3,000, you get 40% of the gains, I get 60%. Your next level gets dropped into the account, 100,000 in buying power. All right, you've proven yourself at level 1, you get 100,000, now your goal is 6,000. You get 40%, I get 60% of the gains. You put no money in this account. If your losses are not your losses, really, they're my losses because it's my account. Your family is not at risk with this. They will never lose a single penny or a dollar. I have every incentive to work with you every day because if I don't do my job and you are horrible, you will lose my money, not your money. And so I am highly motivated to pour every single ounce of experience and knowledge into you that I possibly can. Because if I do that incorrectly, if I fall by the wayside and I don't train you properly, and you manage to go live and you're not really trained properly, you will lose my money, not yours. And you can walk away and all the loss is mine. You will never be exposed to personal losses, you and your family. And so that is why I will get 60% and you will get 40%. But that 40% will come with zero risk for you on this side. You match, you reach you reach the $6,000 at the 100, then you get 250. Now your goal is 10. Then you'll go to half a million, your goal is 20,000. And this goes on to level 5 all the way to 11 levels, guys. We have 11 levels. I'm just showing you the first 4. Your biggest money will start to come in level 3 and 4. And you can make a real solid living at levels 3 and 4. Very solid. Of course, if you go beyond, you can really start posting some really amazing numbers. Okay? All right. Now, you're going to get 40% of the profits. I get 60%, but you're going to have zero risk on the losses. Remember, it's not that the losses don't count towards your trading record. It's just that if you ever are in negative territory, guys, let's say you're negative by $28,000 and you feel like this is not for me, Oliver, I'm done. I don't want to do this anymore. That negative 28,000, that's my loss. That's not your loss. You are not on the hook for losses. I will look at that as I failed, not you. Okay? So this is what I mean by zero risk, guys. You have zero risk. Instead of putting $50,000 to $100,000 of your own capital at risk, what a professional will do is look to trade a professional firm's capital. That is what we do here. Okay? Now, 40%, you get 40% of the profits. Now, what we do have, I don't know why all of this is in Spanish. I think it's some of it. Well, I guess it's in Spanish and English. We're gonna have, yeah. I'm sorry. That's what I have. It's the only thing I can do here. I don't know why is it not complete here. Guys, give me a second here. I don't know. Sorry. Maybe I can do it this way. If I take it this way, I can just do it this way. They're telling me that it's not complete, guys. The slides are not complete. Maybe that works. Is that working? No, it's not. Oh, there we go. Guys, give me a second here. I don't know how to do this. Get this coming. I don't know how to do this. Oh, there we go. Got it. I think I got it now. Is that right? It's a little bit better. It's not perfect, but it's a little bit better. All right, guys, I'm gonna have to go on just like this. Hello? 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 All right, guys, so I'll just try to finish this out with you here, guys. Live trading camp, guys. Live trading camp online. This is really where I take you under my wing for 11 weeks, and we trade the open. We learn all the trading the open tactics and techniques, and so forth and so on. And again, guys, I'm always telling you this. I don't want you to turn this activity into a full-time job. That's eliminating one of its most special features. You should be able to get to a place where you earn your living inside of the first 30 minutes of trading. All right? Most of your gains should come in the first part of your day. And if you want to continue, that's fine for extra, but I want you to be a first part of the day trader. That is what this program, this second piece, is very necessary to do that. And I need dedicated time with you. That's what the live trading camp is, 11-week program. And by the end of 11 weeks, you should at least have everything you need set to start working on becoming this. Now, remember I told you that the entire program was $4,000, guys. Look at what I have for you today. Everything, the live sessions every single day, the live trading every single day. I want to see if you can see this. Can you see all of it? Yes. Okay, good. The live trading sessions every day, the breakout sessions, the study sessions with me, the complete on-demand course, the 300-page manual, the 40% payout, the funded account, never being responsible for the losses at the end, no risk to you and your family. All of that along with the 11-week program where I take you under my wing and we focus on the first 20 minutes of trading. Here is where I've made it extraordinarily doable for the vast majority of you. We're talking about an $1,800 cost for what is a lifelong program that can change the trajectory of your life if you're really serious. You will be trained every single day. It will never stop. There is no expiration. There is no way to flunk out of this as long as it takes. You're involved. All right? It's a very, very powerful thing. So you're getting a $4,000 package for $1,800. And if you sign up, if you know what you want to do and you're in this in the next 72 hours, I'm going to give you 60% of the payout instead of 40%. Now, this is only after you graduate, but if you're motivated, you'll have an incentive to get graduated so that you can gain 60% of the gains instead of 40% of the gains. And this means that you're the majority partner in the business. Again, no risk to you. All funding comes from me. All right? If you walk away with losses, all the losses are mine, not yours. You are not on the hook for the losses. So this is a no risk trading proposition. Just like Wall Street, guys, if you lose firm capital, you might get fired, but you don't owe the company any dollars. This is not anything special. The way I worked on Wall Street, I'm bringing that to you. I'm bringing that to Main Street. I will also give you access, lifetime access to the Oliver Velez Academy. This is something that my team sells for $3,000 access, where it covers every single thing from every little nook and cranny of what I use for trading, how I trade, the tactics, the techniques, the risk management, the trade management, the profit taking, the few indicators I rely on, cycles, best times of day to trade, all of that is covered in these on-demand sessions in the OV Academy. You're going to gain access to that absolutely free as a bonus. You're going to get 60% payout, same cost, $1,800. This is only for people who commit in the next 72 hours. If you commit, it is now 11:20 or so. I'm going to give you until 12 noon. 12 noon New York time. If you sign up before 12 noon New York time, I'm going to give you the complete package, which is a $4,000 value. That is for life. 60% payout on all your gains once you graduate. I'm going to give you access to the academy for life. That academy is constantly being added to, guys, constantly. So it's a growing academy. All right? I am going to also start you off with 1 week mentorship with me. This is with me, just to give you the most powerful start possible. People pay $1,500 for this mentorship, period. This is going to be yours with no cost. I'm going to take you into the mentorship. I'm going to work with you personally to give you the most powerful start possible. I'm also going to give you access to what we call the starter trading kit, which is how we start beginners coming into the trading world. That will also serve to be valuable as well. You're going to get all of this for the same cost, guys. All right, $1,800, but only for those who sign up in the first 30 minutes of trading. So there are two quick things. If you need a little bit more time, but you sign up within 72 hours, you get this 60% payout and access to the academy. Program for life, funding for life. Not bad. If you sign up within 30 minutes before noon, New York time, I'm going to give you the trading program for life, the funding for life, 60% payout, not 40% payout. You're going to get access to the academy. I'm going to take you into my personal mentorship to give you the best possible start you can get. You're going to also get access to the starter trading kit, which is what we use for newbies coming into the trading world. And you're going to get all of that for a tiny bit less than $1,800. Guys, it's a dinner with a couple bottles of wine in your family. A one-time shot for the possibility to change your life forever. Again, I know this is not for everyone, guys, but it is for some of you. And I'm looking forward to a variety of you joining the family. A lot of people ask, Oliver, why do you do this? I addressed this in the last live session. Oliver, why do you do this? Why do you spend time doing this? Why do you spend time teaching and training people? And it's simply because look at what happened today. My real play was Meta, but I took Tesla. I should have taken Meta, but I took Tesla. But some of my traders took the Meta. I struggled with the Tesla trade right off the bat. They didn't. That's why I do this. Do you understand? Team trading is far more powerful than single person trading. The money's bigger. If I miss an opportunity, but I have a team of traders that don't, several of the members don't miss that opportunity, we still win. Remember, I get a portion of the profits. If I'm trading Tesla and losing, but you're trading Meta and winning, maybe all the wins offset my losses and I get a portion of the wins. This is team trading. But it's also the same with you. Operating with a team is more powerful. Perhaps you would not have seen an opportunity, but a team member did, and you got that as well. This is why hedge funds can be so powerful. They operate as a team. Do you understand? Trading teams are more powerful than single traders. They have more eyes. They have more collective years of experience. You understand? So you may have 4 years of experience, but your collective team might have 40 years of experience. The collective hours of experience might equate to 40 years. That's more powerful than one. I am a strong believer in team trading, and that is why I do this. I attempt to grow my trading team so that I can spread that team out over the markets and we miss nothing. I can't be at every location on every stock at the same time, but my team can. I can be at the right location with Tesla. Someone can be in the right location with Meta. Someone can be at the right location with Microsoft. Another person can be at the right location with PayPal. Another person can be at the right location with Square. Another person can be at the right location at Starbucks, and so forth and so on. And so that is why I do this, all right? To grow the effective trading team, which is growing the power of exponential profit production and the missing of a lot less opportunity. Now, guys, there's going to be there's going to be a number of people that are going to pretend like they're one of my advisors and try to get you to send your money to them. Please, you have to make sure it's one of these. If it's not one of these people, it's a scam. I don't want you scammed because of your passion here and your desire to do this. Please be careful. It's very important. Be careful. Only the people on this list, you see the languages they speak, their email, their numbers, and their names. All right? Some people are going to try to pretend like they're these people, but you can double check here. All right? You can double check here. Now, you can do this, guys. It's not rocket science at the end of the day. Trading by the numbers simplifies things. Trading by position simplifies things. Being together with your peers, some of which are far more advanced than you, is very powerful. Sessions with me will be very powerful. If being evaluated by traders who are masters that you see every day in the markets live, trading with them live, this is very powerful. With these things and these tools, you can do this. Without them, maybe not, but with them, you can. You've just got to be dedicated enough. All right? And so traders, listen, I want to thank you for spending these 2 trading days with me. I hope you have picked up something, even if you don't decide to join me. I hope that you've picked up something that you can utilize in your trading every single day for the rest of your life. All right. I made a vow a long time ago that every single time I am afforded the opportunity to get in front of you or to grab a mic or to teach, I will do my best to leave something behind that you consider valuable and can use for the rest of your life. I hope I've done that here today. And if I haven't, I'll try to get better in the future. All right? Okay, guys. Thank you once again. Thank you all. And I also want to, in advance, welcome those who've already decided to become members of our trading team. We got an amazing, amazing rest of the year in front of us. We're going straight to the top. All right, guys. Ciao for now. Ciao. Boom, boom, boom.